Hi, and welcome to a new episode of the Luxembourg PE&VC Stories. Today's guest will be Matthew Maguire. He's Director of Finance and Strategy at Park Square Capital. Hi, Matthew.
Hi, Stefan. Thank you very much for having me here today.
A real pleasure also on our side. So let's start. Could you give us a quick snapshot on Park Square Capital and also explain us who, when and how this whole adventure started?
Sure. So Park Square was founded in 2004 by Robin Dumas with the mission of creating Europe's leading credit provider. If we fast forward to today, 2023, we've got just under $13 billion under management, a team of over 100 people and offices in 8 locations. Our strategy is very simple. We want to deliver outstanding investment performance to our investors. And we've got one of the largest track records in Europe with nearly 19 years of experience. And I think what really sets us apart from our competitors is our consistent discipline and the diligent approach that we take to credit underwriting. And we think this is going to lead to outperformance over the long term. And we believe we have one of the best track records in terms of loss rates in Europe.
What are your favorite verticals and typical investments, and also how do you source your deals?
So we have 3 business lines within Park Square. The first is called Capital Partners. Now, Capital Partners is our very first strategy going back to 2004, so a 19-year track record. It focuses on providing junior capital solutions to both private equity sponsors and companies directly. Investments are typically higher yielding instruments such as second lien cash pay, payment in kind, preferred equity, common equity, as well as structured equity. So it's, as I say, it's the higher yielding investments in the capital structure. Our second vertical is called Credit Opportunities. This is our large cap senior debt program where we provide anchor commitments to private equity sponsors. We launched this back in 2007, so again, it's got a very long track record, and it's also opportunistic. So what that means is that as well as the primary anchor investments, we also do a lot of secondary trading activity. We've got a well-established capital markets team who are able to take advantage of market volatility like we're seeing today and deliver really attractive risk-adjusted returns. And then the third and final strategy is known as Loan Partners. We launched this in 2017 as our first dedicated standalone direct lending strategy. So this is also senior debt, but whereas Credit Opportunities is focused on large cap, this is really focused on the mid-market. So businesses with 25 to 75 million of EBITDA. And we think of all 3 strategies as being very complementary. And when we face up to a private equity sponsor, we can offer them the whole suite of solutions, ranging from the first lien debt all the way through to common equity co-investments. With regards to the second part of your questions around our origination network, if I go back to sort of our longevity, we've got 19 years of relationships with private equity sponsors, with companies, with advisors and banks, and that is a huge wealth of origination opportunities. The team is one of the largest dedicated teams to private credit in Europe. We've got 35 investment professionals, and what we've really focused on over the last 5 to 6 years is building out our local office network. So in addition to our headquarters in London, we now have offices in Frankfurt, in Paris, in Stockholm, and in New York, and that allows us to have boots on the ground, be connected to the local private equity network, the local advisors, and that's proved dividends in our origination activity over the last few years.
And in this context, any specific deal you would like to highlight?
So whilst I can't go into the specifics of deals, there's 2 key trends that I'd like to highlight for you. So the first is that banks are very much under pressure. You only have to open a newspaper to see yet another headline of some of the banks in the US collapsing and having to be rescued, or Credit Suisse being taken over by UBS. This is causing issues with corporate lending availability from the banks, and it's a fantastic market opportunity for private credit to step into the void and become the financing solution for sponsors. And that's exactly what we're doing at Park Square. I can give you numerous examples over the past 18 months or so where Park Square has arranged a loan that ordinarily would have been arranged by the syndicated markets. So that's both excellent from a deal flow perspective, but also very attractive from a returns perspective. And we're underwriting deals that previously would have been syndicated at, let's say, 350 basis points, that are now being arranged by the private markets at 650 basis points. It's exactly the same company, exactly the same risk, but the economics are significantly better. The second trend, again linked to the banks, is the rising interest rates. And it's no surprise that that's putting capital structures under pressure as companies are forced to deal with the increased debt costs. Now, for many companies, that will be fine. They're growing and able to continue to make their debt payments. But for some companies who are still very high quality, stable and predictable revenues, they will need to de-lever their structures. And that provides, again, another interesting opportunity for private lenders to either refinance with a senior structure or actually put in junior capital solutions like the PIK instruments or the preferred instruments that I mentioned earlier. So I think they're the two key trends that we're seeing, and we think that's going to drive a lot of deal activity over the coming year or so.
So this is really an all-weather strategy, if you can describe it like that.
It's very much an all-weather strategy, yes.
Excellent. You briefly touched upon different offices you have. Could you describe a little bit your operating model and also more specifically the Luxembourg office?
Sure. So, as I said, we're a little over 100 people in 8 different offices. London is our headquarters and where the majority of the team at Park Square sits. We then have 7 other offices, 4 of which are investment focused. So that's New York, Frankfurt, Paris and Stockholm. We have 2 which are investor focused, Seoul and Tokyo. And then we have Luxembourg, which is really the heart of our fund administration process. So turning into Luxembourg in a bit more detail, we've had an office in Luxembourg since 2004, so right back from when we first started, and it's a really important part of our operations. In 2019, we obtained our AIFM license from the CSSF, and we have a team of 8 here at the moment. They're very senior, very experienced, with a range of specialities from risk management to compliance, to fund accounting, to valuations, and then finally administration. So as I said, it's really sort of the backbone of our administration of all of our funds. And that's driven by investor demand. So Luxembourg is the jurisdiction of choice in Europe for our investor base, and that's why it's such an important hub for us.
This is the typical success story we like to hear. So starting in the beginning with an office, some others with SPVs, and then afterwards upgrading the substance and also certainly the size with AIFM funds, etc.
That's exactly the path that we've been going down.
Excellent. Concerning the 2 last years, how have those years been for your group and yourself?
They've been very successful, I would say. If I take us back to what I said at the beginning, which is to build Europe's leading credit provider, we judge that by performance rather than size, and we take a very disciplined and cautious approach to our credit picking. So the portfolio, as a result of that, is in excellent shape. We have very few to no issues within the portfolio, and that allows us to be very front-footed in our investment activity. So over the past 2 years, we haven't been worrying about our portfolio, we've been investing, and the market environment has been terrific. We've seen high-quality names trade at a discount to par on the secondary markets, and our capital markets team has been able to take advantage of that. And we've also seen some very attractive primary deal activity, as I mentioned, through the lack of liquidity in the banking sector. But I think the most important change that we've seen is base rates. So we are predominantly a floating rate investor, So around 90% of the capital that we have invested, around 9 billion, is floating rates. And as we've seen rates go from negative 50 basis points in Europe to, let's call it 500 basis points on a forward-looking basis, that is just humongous in terms of additional return that we're generating for our investors. So on a 9 billion worth of investments, that's effectively another 300 to 400 million of additional profit that we're generating per annum for our investors. So for me, that's the biggest success story of the last 2 years.
Makes also then the credit strategy very interesting for diversification purposes.
Correct.
ESG in that whole story, where is it? Do you have a strategy, a policy, and what are your ambitions?
So ESG has always been a part of our investment process. We think of its ESG not really as a separate bucket, but really the analysis of risks. ESG risks are just a way of classifying certain business risks. And as I said at the very beginning, the key thing we're focused on is avoiding losses and having excellent performance. And we're focused on generating the best risk-adjusted returns to our investors. So our ESG philosophy is deeply ingrained in our investment process. It is not supplementary to the financial analysis that we do. It is an integral part of that process. And we think ESG risks can have a big financial impact on businesses through operational inefficiencies, through regulatory risks, and as a result, it's a core part of our process. In terms of strategies, the majority of our funds are currently Article 6 under the SFDR, but we have launched our first Article 8 fund around 12 months ago, which is classified as Article 8, which has been well received by investors.
That's a good news. So we will invite you again for another interview very soon.
Thank you.
You mentioned the Luxembourg office as very important and strategic for the entire group. Mm-hmm. What could you tell us about Luxembourg? How do you find the ecosystem, the infrastructure? Has it evolved in the right direction, or are there things we should potentially also amend or update?
So I think the ecosystem in Luxembourg is incredibly well established. I think you've got a fantastic group of service providers here in Luxembourg. And I think for me, most importantly, the regulatory environment and oversight is very robust. And that's important for both us as managers, but also our investors. And I think for those reasons, that's why it is the jurisdiction of choice for our investors. So from my perspective, I wouldn't change anything. And we're very happy to be based here.
We're very, very happy with also the robust description. Let's make it not too robust in a negative sense, for sure.
It's definitely not in a negative sense. I think the role that the CSSF plays and the robustness of it gives it a huge amount of credit with investors, which I think is really important.
Good. Let's then get a little bit more personal. Matthew, where did you study and what did you study, and certainly where did you start your career?
Sure. So I studied geography at the University of Loughborough.
Okay, that's a very interesting one.
Yes.
Okay.
So Loughborough University is a very big sporting university, and I have always been incredibly sporty. So it was a fantastic place to balance both my studies with my training, and I had a really, really enjoyable 3 years there. After Loughborough, I joined PE&VC, where I trained as a chartered accountant. So I was there for 5 years before moving on to the Children's Investment Fund Foundation, which is a philanthropic organisation that invests in climate change projects as well as projects to improve the lives of impoverished children. It was an absolutely fantastic experience, and in my role, I travelled all over sub-Saharan Africa and Asia. And for somebody that loves to travel, it was a dream position. And I think those two job combinations, sort of the formal training through the ACA at PE&VC, and then the sort of the rich experience I had at SIF in terms of the travel and the interactions was a really good starting point to then launch a career into private credit.
This is a very rich journey, I would say. And when did you then join Park Square?
So I joined Park Square in 2016. So I've been there for just coming up to 7.5 years. I absolutely love it, and I think what really excited me was working with a sort of a high caliber and dynamic team in an industry that is growing very rapidly. And those two things are a good recipe for a successful position.
Good choice again. Any pieces of advice you would like to share with our young talents who would like really to start a career in private equity or credit?
The first thing I would say, which is clear from my resume, is that there is no one set path in order to start a career in private markets. I studied geography before joining PwC and starting a career in finance. So there's no one set path. I think what you need is determination and a willingness to succeed. In terms of advice of starting in private credit, when new people join Park Square, I often say to them that private credit is like learning a new language. There's a whole host of acronyms, of technical standards that you need to learn and absorb. Ask as many questions as you can, learn from the people that are more experienced, and really just push for it.
Is there any specific leader or person who inspired you during your career or life?
So whilst it probably would embarrass him for me to say this, but my current boss has been an incredible role model and mentor. I think that the two things that really stand out for me is learning from him how he builds and develops high-performing teams, and also how to drive through strategic initiatives at organisations. And they're the two things that I really try and emulate myself.
We're also strong believers in mentoring or showing the right example. That's a great story then.
Yeah, it's incredibly important, and sort of 7.5 years into my career at Park Square, a lot of my team have been with me for nearly the entire period, and they're now managers in their own rights, and they're now starting to mentor the new joiners coming, and that is very rewarding to see.
Yeah, taking responsibility and continue growing and learning. Excellent. Now, a few, let's say, books, podcasts, series, or anything you would like to share with the audience where you think that is really interesting and they should potentially have a look at that.
So my favourite podcast at the moment is called Captains with Sam Warburton. So I said I'm a big sports fan and a big sports person myself. Sam Warburton is the former captain of the Welsh rugby team and the Lions. And in his podcast, he interviews other famous leaders in sport. So he's had the likes of Chris Hoy, who is a cyclist, Paul McGinley, who is the Ryder Cup golf captain, Johnny Wilkinson, the English fly half. And in the interviews, he really delves into what were they like as a leader on the sports field, what were sort of the attributes that they tried to bring to the team. And I really enjoy listening to that, and also seeing the transferability of those skills from the sports field to business, because there is a huge amount of overlap. And there are a few things that I've learned from the podcast that I've tried to put into practice day to day at Park Square.
Sounds like another great reference which we will need to add to our playlist.
I mean, I'd highly recommend you give it a go.
Thanks a lot, Matthew, for everything and for sharing all your insights.
No, thank you, Stefan. It's been a pleasure to be here today, and hopefully we can do it again sometime soon.
Count on us. Thanks a lot.
Thank you.
Bye, and thanks for watching.